If I was in the market for an investment property in Guelph right now, I would consider one of these two properties. The first one is a really turnkey investment, not a whole lot of work needed, but one that you can easily rent out and is in a great area for quick appreciation. The second one is a larger home in the downtown area. It's a bit more of a project and going to require a bit more upfront cash, but has massive upside potential. Which one's the better investment? Well, let's dive in and break them down. So the first one is a nicely renovated townhouse listed at $569,900. So this property is located in a great spot. It's got close to transit. You're within walking distance to downtown. You can also walk to the University of Guelph using the covered bridge. It's located in the Ward area, which is a really hot spot right now for appreciation. You've got lots of new high-end development going on in this exact location. So it's going to be a nice, easy investment where you'll get good renters and you should have a lot of upside. This property is currently listed as a 3-bedroom home, but it could be very easily converted to 4 bedrooms. You've got a front living room, which would just take a wall and a door, and that could easily allow you then to rent it out per the room to 4 students. In addition, the property has an unfinished basement where you could potentially add an extra bedroom and bathroom. What I like about this property is it's currently vacant, so it means that you can go and select your tenants and you can get full market rents. Let's dive into the numbers and see how much cash flow this property would generate. So looking at the numbers, if you were to purchase this property for the full list price of $569,900, you'd be looking at a 20% down payment, 30-year amortization, and an interest rate of 4.3%. Your yearly taxes are $3,576, and insurance for this property would likely be around $1,500. I've crossed out utilities because you would be renting this in addition to, and then put $200 a month just for general maintenance. The property for 4 bedrooms would rent easily for $4,000 a month. The monthly cash flow would be $1,120. So that's over a 7% cap rate and an 11% cash on cash return. Now, some things to consider with this home is that as it is right now, it's only 1 bathroom. So you'd have 4 bedrooms sharing 1 bathroom, which isn't ideal. If it was me purchasing the property, I would invest another $50,000, maybe $60,000, finish the basement, create either another bedroom or rec room, and an additional full bathroom, which would dramatically increase its appeal to tenants and allow me to generate more cash flow. It also only has 1 parking spot. Now, if you're renting to students, it's not as big of a deal, and this location has such great access to transit that even with only 1 spot, you're still going to be able to get good tenants. Up next is a larger detached home in the downtown area. So this property was converted back in the 1960s into a student rental property. And why I like that is because the renovations were done so long ago that a lot of it is likely grandfathered in. This home is listed at $798,000 and it has 8 bedrooms. Do I really need to say any more? But it actually gets better. It's currently rented right now for $6,595 a month, which means that you could buy this today and tomorrow be cash flowing close to $1,300 every single month. Now, as you could imagine, this property definitely needs some TLC and some renovations. But what I would do is, because it's currently generating really good cash flow, I would leave it as is until tenant turnover. And then at that point, what I would do is I would go in and I would invest maybe around $100,000, and I would do a couple of things. First of all, I would update the finishes with very simple, cheap, but durable, luxury vinyl plank flooring, facelifts on kitchens, etc. But where I would invest more of my money is I would divide the home up into 2 units, creating a legal lower level apartment and then an upper unit. And I would separate the hydro because right now utilities are included in the rents, and that is a major part of the drain on the current cash flow. By renovating the home and dividing it up into 2 units, it would allow me to increase my cash flow, my gross cash flow, to $7,500 a month. And then what I would do is, after the renovations were complete, I would refinance the property to pull that $100,000 out and either utilize that to go and buy another investment property, or if you didn't have the extra $100,000 in cash sitting around, you could do a short-term private loan, which would be at a higher interest rate, do the renovations, and then just refinance to pay back that private loan after. The other advantage with this property is that it's a large lot. So since you can now add up to 3 units per single family residential lot in Guelph, it would allow for further expansion where you could add an accessory dwelling unit like a coach house at the back of the property, which would further generate another $2,200 to $2,400 in monthly rent. Let's run through the numbers on this property for it as is right now, and then if you were to renovate, re-rent, and refinance. So if we were to purchase this property for its list price of $798,000, put 20% down with a 30-year AM and a 4.3% interest rate, the taxes on the property are $5,846 a year. Insurance is currently $3,300 a year. Utilities are $657. Again, a huge part of this, $6,500 a year, or almost $6,500 a year, is in your hydro. And then other monthly expenses, which would be repairs, maintenance, at $650 a month. Your rental amount right now is actually $595. So you're looking at a positive monthly cash flow of $1,366, putting the property at a 6.81% cap rate and a 10% cash on cash return as is. Now, if you were to invest $100,000 and then you were to refinance the property at a value of $900,000, pulling out 80%, that would leave you with $180,000 left in the deal, plus your $12,500 or so in land transfer tax and your legal fees. You would then be able to rent the property for $7,500 a month. You would reduce your utilities because you separated the hydro, so you would only have the gas costs in there. So that would reduce utilities down to about $150 a month. And your CapEx would also reduce as well, since you've done a lot of interior renovations. So instead of $650 a month, we would budget more around $400 a month. You're now generating a positive cash flow of $2,624 every single month. That is an 8.25% cap, which is unbelievable, and a 15% cash on cash return. If you want any specific details on either of these properties or any other deals in the Guelph marketplace, please reach out to us at Go Wild Real Estate and comment, let us know which one of these deals would you buy.